Hello and welcome, everybody. We are back with the Pulse here, hosted by PeakBot. I'm Dillon, joined by my co-founder Ben. Hope everybody's doing well with the holiday season here. Merry Christmas to all who celebrate, and of course, we are back with a shortened trading week here, with another one to come, with New Year's right around the corner. So, hoping everybody's enjoying the holidays. No white Christmas here. Just sad, rainy New Jersey. But we're excited to get into it. Relatively standard agenda here today. We're going to take a look at a few charts. We are going to observe some stocks. We're going to talk a little bit about PeakBot and automating things. We're going to look at my portfolio, make any changes necessary to stick to my game plan. Last few days of the fiscal year here. If you're going to be making any risks, one would say now's the time to do it. Others would say stick to it. But anyway, we're here. We're excited, Ben. I will hand it off to you here in just a second to get us started and taking a look at some of the top stocks from our watch list this week. Anything I miss?
I don't think so. And you always ask me what you miss, but
yeah,
I think you get it every time.
It's part of my thing. It's like a comfort zone. It's rather than saying like, okay, let's move into the next section. It's kind of just like the cue card. Like, all right, let's do it.
You nail it every time. So I'm going to pull up my watch list here, our watch list, the PeakBot watch list, and talk through yet again some changes that we had. And yeah, Dillon, you mentioned we are coming near the end of the year here. You might be looking back at your year and at your portfolio, and maybe you're not exactly where you want to be, or maybe you're in a super comfortable position. Now, in either case, I think the experts would agree that, don't change anything, right? Like stick to the strategy, stick to the standard motions that you go through, and just treat it like a normal week. Now, you mentioned, Dillon, and you're totally right. This is an abbreviated trading week. Monday, the market's closed. Next Monday, the market will also be closed because of New Year's. So we're working with 4 days. Now, our strategy that we're automating and that we talk about here every week, the wheel, sells weekly contracts. So typically, we sell a contract on Monday, and then that contract will expire on Friday. Now, because the market was closed, we're going to be selling on Tuesday, and that contract will still be expiring on Friday. So that's 4 days of an open position versus 5. That's 20% less exposure, 20% less risk. I think we could expect 20% less reward. Although I'm looking at some of these stocks here, Dillon, and there's still some pretty high payouts.
There are.
If we wanted to go premium hunting, which I know a lot of us do, and I know that you're very adverse to doing that. I'd like to know, when it's your segment, how your rules change, because guys, Dillon trades with rules, even through automations. I'd like to know how your rules change for an abbreviated week like this week.
Yeah.
So if you haven't thought about that yet, you've got about 15 minutes until your segment. So, So here we've got our watch list. And what we do with this watch list is we like to show what's the amount of cash you need in your account. You don't need to own any shares to start with these strategies. You just need to have the cash in your trading account. What's the estimated maximum loss? What's the estimated net premium that you can earn by having this cash in your account and trading the wheel? And then that green column there, the estimated return on cash needed, that's all in effort to show you what your potential return on your cash in your account would be. And we calculate that just by taking the net premium divided into it's the cash needed divided into the net premium. That gets us to our percentage return. So this is a simplified version of the watch list. We've updated some things. We now have a timestamp on here, so that way anybody can see when the last time was that we updated the watch list. So if you're wondering, hey, you guys, did you update the watch list for this morning? You can see that we hopped in. It's actually an automation that does this. We've got a script running in the background that updates this every 12 hours or so. We'll get that on a more steady schedule, but this was updated, looks like 45 minutes ago. So that's pretty good, considering, market's going to be open. If you're considering trying out PeakBot, Dillon will show you how in just a bit, but you've got enough time to set up your account, integrate your Tradier account, and actually get trading on a 2-week free trial, no credit card needed, by the time we would start executing trades for you. If you're looking for more detail behind this watch list, you could follow these dotted lines all the way to the right here, and then we provide a lot more detail behind what this strategy is doing, the different strike prices that we're setting up for you. So the traditional wheel will sell a cash secure put, and then when you get assigned, it'll start selling covered calls for you. We're actually putting a hedge on that cash secured put, making this a put credit spread. And that's how we get to our maximum loss number here. So there's a ton more data over here. We have call side data as well. We're selling the 50 delta, buying the 20 delta on the call side. So if you're looking for that level of data, just scroll to the right. But for beginners and people not as familiar with options, we wanted to keep it super simple on the left-hand side. Now, you don't have to rely on what we put together for you. You can go ahead and actually do a lot of this research yourself. I will say that compiling this list, because I used to do this list manually, it would take about 2 to 3 hours every week to put it together. Now that we've got automations in place, it's a lot faster. So just a word of caution before you go out and perform some of this research yourself. But I'm going to show you how, if you were interested, and I'll just briefly go over this, and then we'll hop into some charts. So I know I put this in the chat in our YouTube channels. I know we're also streaming on X. If you guys have questions, please put some questions into the chat. We will answer them live. If you guys have stocks you want us to pull up and look at the chart, look at some technical analysis in just a bit, we can do that as well. So I'm going to head over to bar chart here, and this is what I do. This is what we do to put together our watch list. I'm going to click on options. I'm going to click on most active options here, and then I'm going to be presented with this table. Zooming in a little bit, you can see that there's different columns here with different information. You could download this table, and I highly recommend downloading this table so that way you can manipulate the data in any which way that you see fit in an Excel file, or you can copy and paste it to a Google Sheet. The filters that we like to put on when putting together our watch list are we need to see high options volume. That's number one, right? Right now, and this could change periodically, but right now we're looking at stocks that have over 20,000 in this column here. We want to make sure that there's enough liquidity to get the PeakBot community in and out of a position, basically in a position without much slippage. So we want to look for a high enough volume to handle all of our automated trades. And then second is we want to look for lower dollar value stocks. And we typically look for stocks under $100. There will be some exceptions, like we're going to analyze Coinbase today. Coinbase is trading at 175 right now. I'll explain why it's on there when we get back to our analysis. But the reason we want to keep it lower dollar value stocks is because if we think about the principles of the wheel, if we get assigned shares, if your sold put expires in the money, then you're going to get assigned 100 shares per contract, which means you need to have enough cash in your account to buy those 100 shares. So if we're trading like NVIDIA up here, 488, let's say we sold the 480 strike. If we were assigned shares there, we would need $48,000 in our account. Now, the average PeakBot account size is about $10,000 to $12,000. So if we're looking out for our average traders here on PeakBot, that's much too high. We want to stick to the lower dollar value stocks. So that's what we do to put together our watch list. And again, we sort it all here by estimated cash return on cash needed. Up to you how you want to slice and dice this information. You can download this watch list. You can click here, and then you can change the data. You can move the data around however you'd like. You could filter these columns however you'd like. But for at least simplicity and ease of use here, we like to sort by estimated return on cash needed. I'm going to pull up some charts. I know we said we were going to look at CHWY. We're going to look at Verizon. We're going to look at ticker PARA, Paramount, and then Coinbase here. So Dylan, before I pull up any charts, I'm gonna take a line out of your book. Is there anything that I missed that you feel is important?
No, you mentioned Coinbase. Now, again, I'm the layman of the group. I'm not the technical trader. I'm the guy who takes a look at the charts, feels something good in my gut, and goes with it. Correct me if I'm wrong. Coinbase, has it skyrocketed?
Oh yeah,
I,
yeah.
okay, because I don't
I'll pull up
remember it.
Coinbase.
I don't remember it trading anywhere near that high.
Yeah, if
Because
we
there was
take a
a point
look,
where I could afford it in my portfolio. Right now, I'd have to make room for it.
yeah, no, it's pretty high. It's definitely high right now. If we look at this chart, Dylan, you probably remember back in like September,
Yeah.
October, November. Since November, I mean, look at this look at this
Boy, that's
trajectory
healthy.
here. Yeah, that's the return of crypto right there. Um,
Damn.
so while we're here, we can get into an analysis. So what I like to do is when I pull these charts up, I like to just get a 1 month view, right? We're trading weekly options here. So, if I'm looking back at the past couple weeks, what's the trend been? If I had been trading Coinbase for the past couple weeks, it looks like if I was on the put side, looks like I'd be doing pretty well. It looks like I probably wouldn't have been assigned any shares. So the trajectory still looks like we're moving upwards in a pretty healthy state. I also like to look at, and I mention this every week, Tradier's got a cool little tool built in, technical analysis tool right below the chart. It'll show you what different technical signals are indicating for price movement for any company that you're looking at. So it defaults to a 15-minute analysis. I like to take a look at the week. And when I switch that to a week, it looks like Coinbase, again, technically, based on technical indicators, looks like a really strong buy. We've got 15 buy indicators,
Damn.
8 indicating neutral, 1 indicating sell. So the chart compared with this technical analysis it's looking like Coinbase is pretty strong. It's a pretty strong option moving forward. Now, the reason why I want to talk about Coinbase today is because, as we pointed out, Coinbase is high dollar value. Now, it wasn't, and we had considered removing it from the list, but we got a lot of feedback from our community saying, "Hey, keep Coinbase, right? We know it's expensive, but it's been really consistent. It's paying out, really high premiums. Like this week, again, it's an abbreviated week, and we're still getting, 1.2% return on your cash needed, which is awesome. It's the highest premium dollar value on the board here at $192 estimated. Again, this is all estimated. This is going to change when market opens. The best we can do is give you our outlook with the information that's available. We can't predict where prices are going to go. So when trades actually execute, things might be a little bit different than you see here. Trades execute for PeakBot between 11 a.m. and 1 p.m. Eastern. So Coinbase on here still by popular demand, still has a great return attached to it. If there's a stock on here or if there's stock not on here that you'd like to see and automate, you let us know. We'll evaluate it quickly. We'll let you know if it's possible. Again, those things that we look for are: 1, does it provide weekly options? 2, is there high enough volume? And 3, what's the overall dollar value? Now, that'll matter a little less, the dollar value, if it's a request, but we'll still want to check for weekly options and volume. So that's Coinbase.
Awesome.
I'm going to go to CHWY, which I wanted to bring up CHWY because I don't know, Dylan, this is something that maybe you wouldn't remember because it wasn't on the list, but CHWY didn't typically show up on like the top 10 very often. Now,
Right.
over the past couple of weeks, I've been noticing CHWY towards the top.
Totally.
So, that for me, I like to look for stocks or companies that are typically towards the top of our list. That way I know that week after week, I'm going to be getting a pretty healthy premium payout. So in terms of my strategy, if I do take a small loss, I know that I'm going to be earning it back over the next several weeks because I know that this company is paying out higher premiums. So CHWY has now made it at least onto my mental radar. I notice it at the top of these lists now. I noticed that it's providing a pretty decent payout. So I'm going to pull up the chart here. We're gonna look at the 1 month chart. Pretty healthy over the last month. Now, I mean, we all did just see, year to date, it looks like the overall trend direction is down, potentially breaking out of this downward spiral here with a strong market right now. But over the last month, it looks like we're doing a good job at recovering there. Going to switch back to a weekly technical analysis. Now, technical indicators are saying neutral. Beware. So, with that known, and considering all the other options available on the watch list, I would, personally, not financial advice, none of this is financial advice, but personally, I would say I'm going to look at some other stocks, some other companies, and see what's available there. Maybe something like Verizon. Now, Verizon, you'll notice on our watch list is that it's not on our watch list. Now, this is opposite of CHWY, where CHWY has been showing up more towards the top of the watch list. Verizon tends to float in and float back out of the watch list. Now, the reason it would float out of the watch list is if it's not paying a high enough premium. And what I mean by that is on our watch list, if the net premium isn't at least $10, then we're going to take it off of the list. By the time you factor in any fees, potential assignment fees, $10 just isn't going to cut it, and it's not worth the bang for your buck if you're not making at least $10 on lower dollar value stocks, especially Verizon, because Verizon's trading at $37 right now. You need probably like $3,500 in your account. Not worth it. But when it is paying higher premiums, I was talking to somebody this week about a strategy that they were running. Is they like to own shares of a company that pay pretty decent dividends, and Verizon pays a pretty decent dividend, and they like to sell covered calls on top of that. And their strategy is hold the stock, make money on the covered calls, and then when dividends come around, you get a nice extra little pay bump there throughout that dividend payment. So Verizon is just an example of a company you can do that with. There's plenty of stocks on the PeakBot watch list that you can run that same type of strategy with. Now, it doesn't change any of the settings you would input in PeakBot, but just something to consider. And
one thing. Sorry, Ben. I was just going to mention one thing with Verizon. There have been weeks where I noticed Verizon on our unhedged watch list, where we're selling naked puts and calls, cash secured puts, covered calls. It'll squeak onto the bottom of the unhedged watch list, but it wouldn't be on the spread or the hedged version of the watch list due to it might be worth it if you're not paying back any premium. It might, be a little above that $10 premium payment, but when you're paying a little bit of that back, it then falls off. It's not on either right now, but I have noticed weeks where Verizon is on the unhedged watch list because we're not paying back any premium, and the calculations still make it worth it to be on the list. But once you consider paying back some of that premium, it's not on there. So I wanted to make that point to say there are stocks that could be on one watch list of the wheel and not the other, depending upon the net premium that you'd be receiving.
Great point. Great point.
Thank you.
Finally, the last stock that I had on my list, and again, any questions, send them in. We'll answer them. Any stocks you want us to pull up, send them in, we'll pull them up. But I want us to look at Paramount again, because Paramount, kind of like CHWY, but I'd say less frequently, is starting to creep up on this list. On non-earnings weeks, Paramount is, I'd say, within the top 20. It has been within the top 20. So it's, Paramount is now on my radar as well. I'm going to quickly take a look at the chart here. It's been choppy over the month. It's probably this high volatility that's been, leading to these higher premium payouts, higher volatility, higher risk, higher potential reward here. So the chart's been pretty choppy, as we can see. But overall trading between $17 and like $14.50. So decently wide range. And it looks like as of the past 2 weeks or so, trending downwards, kind of flattening out, potentially hitting a support line right around $15. So we'll monitor that. I'm not personally going to be trading this week, but it is on my radar. If we do get a bounce back, we might see a nice run back up to $17, and we can collect premiums all along the way. So finally, for the technical analysis here, go to the week. We've got 11 sell signals, 7 neutral, 8 buy. When you add the neutrals to the buy, it's 15 versus adding the sells to the neutral, which is 18. So pretty close in my opinion. Again, just something to consider. We do have this big list of companies here to choose from. So I'd like to go out and say, hey, there's probably better options on the list. But again, do your own research, your own due diligence. If you're not comfortable owning a company, probably shouldn't trade it on the wheel, because you will get assigned at some point, and you will own that company. So it's important to be comfortable owning. So with that, Dylan, I'll hand it off to you. You can show the good people how they can automate this strategy in their PeakBot account, how they can get set up before the market opens, and how they could be automating their trades today.
Awesome. Thank you so much, Ben. Great analysis on those charts there. I still can't get over Coinbase, but I guess because I'm not all that into crypto. Nothing against crypto. I just never had the time to really educate myself around it and the investment part of it specifically. But an interesting chart to look at for sure. So I'm going to share my screen here. And we're going to take a look at my PeakBot portfolio for the week. And we're going to make some changes. Again, I want to make it very clear. If I wasn't the co-host of this show and the co-founder of this business, I probably wouldn't be changing my portfolio every week. But for you good people out there, if I'm building out the time like I do for this show to look at the charts and look at my portfolio week to week, then I'm going to make some changes. And same goes to you. Look, again, not financial advice. If you have the time to evaluate your portfolio weekly, why not? If you don't, and that's one of the reasons you came to PeakBot, is because you don't have the time and you don't have the emotions for this, pick stocks that you feel good about and let it ride. Not financial advice. Let the bot do what it's built to do. So anyway, throughout the year, I've transitioned from I used to trade more like 8 to 12 contracts per week on my 15K account, taking smaller contracts on cheaper stocks. I've transitioned out of that. I'm now really only running anywhere from 3 to 5 or 6 contracts a week, and I'm taking the more expensive ones. More expensive, take that as you may. The average contract maybe between $3,000 and $6,000. So what we're going to take a look at here, these are the 4 I ran last week. I didn't get assigned any shares, so I have no positions going into the week right now. So when we take a look at the watch list, I'm going to take a look at AFRM. I'm pretty sure AFRM is going to be sticking around. So this is the hedged version of the wheel watch list that we're looking at here, meaning that we're selling credit spreads, put credit spreads and call credit spreads. With AFRM, the stock's currently trading at 49.06. Our strike prices at the 30 delta and the 10 delta, we're selling the 30 delta at 46.50. We're buying the 10 delta at 43. So that only provides me a $350 max loss in our worst case scenario here. That only happens on paper about 10% of the time. And that's if the stock was to, by Friday, fall below the $43 strike price here. I'm no longer taking the shares at that point. I'm taking my max loss and I'm wiping my hands clean and selling another put credit spread the following week. But it's going to take me about $46.50 in cash to enter this contract. It's going to pay me $65 in premium, which is a 1.4% return. For those of you watching the show, who have been watching the show, my range is between 0.5% and 1.5% paid in premium, net premium for the week. Typically, I break my own rules sometimes, but that's where I'm at. So this is right in the wheelhouse. We're going to keep rocking with the firm. I like the cost of it. I like what it's paying me, and I like the max loss. So we're going to stick with AFRM. It's going to stay right there. We're going to take a look at Marathon. So Marathon Digital Holdings, definitely a popular one for the wheel watch list for most of the year, I'd say. It has been up here quite a bit. However, the volatility keeps climbing. Ben, actually, maybe at some point, maybe we take a look at the Marathon. Pull it up after I make these adjustments, but I am curious to see what that chart looks like, because a 3.31% return without an earnings report or anything like that, something's going on.
At that point, you're going to want to look at news, right?
Yeah, something's going on here that is making this stock pretty volatile this week, because you're only putting up under $2,500 to get paid $81 in premium. That's wild. So that's well out of, that's more than double what I'm comfortable earning in premium due to the volatility. So I'm going to go ahead and remove Marathon from my list here. But I'm going to go ahead and remove that, but we'll take a look at that chart in just a minute once I'm done with the portfolio changes here. So to keep everything even, I'm going to replace Marathon with Upstart. Okay. For those of you who've been around with PeakBot long enough, before we started hedging the wheel with credit spreads, there may be some scar tissue with Upstart from a really bad earnings report. I don't know how many quarters ago, but we're far more protected now. Stock's trading at 44.16. Our strike prices and our spread is between $41.50 and $38. That's, if it finishes between that price, I will happily take the shares and sell a call credit spread the following week with this data over here. Same max loss as my other contract that we were looking at with Marathon, with a firm rather. It's going to take $41.50 to run this contract. It's going to pay me $66, which is a 1.59% return. I'm rounding down to 1.5, although, just messing around. But I'm going to like Upstart here. So I'm going to come back in, and in 3 steps, I'm going to add Upstart into my portfolio. Big green plus sign here is where we get started. First, select your bot, the wheel. Second, select your stocks. I'm going to type in Upstart. Third is type in the number of contracts or spreads that I want to sell, which I've done here just by entering 1. Advanced settings, I don't have to click into this because I already have the hedge turned on, but in case you wanted to turn it off, that's where you would do it to sell a naked put, but I'm going to keep it spread. All right, activate, agree. Upstart is now added into my automated portfolio. So now I'm rocking with Affirm and Upstart. We're going to take a closer look at Unity Software right now, which has dropped a bit. So Unity Software trading at $39.21. Strike prices are $37.50 and $36, which is nice because that's a pretty close spread, meaning your max loss is really only $150 here. Worst case scenario. $37.50, but it's only paying $24. Although it's in my range, slightly above 0.5%, paying 0.64%. It's not getting me all that excited with an abbreviated week and taking a look at some of these other contracts. So I'm going to go ahead and drop Unity. I'm going to click here. I'm going to remove it, and Unity's gone. So to replace that, I'm not even sure I'm going to replace it. I think I'm happy with these contracts right here between Upstart, Affirm, and Wayfair, which if we take a look at Wayfair here, let's find it. Here it is. So Wayfair currently is trading at $67.11. Our strike prices are between $59 and $64, which creates a $500 max loss, a bit of a wider spread there. But $6,400 paying me $74 in premium, which is a 1.16% return. I dig it. I love that. I've been trading Wayfair for quite a while. I'm going to keep these right here, and I'm going to rock with these 3 for the week. But I am going to ask Ben to take a closer look at that marathon chart just out of curiosity. But
You
those
got
are
it.
the 3 that I'll be trading this week. And I think that's it. So again, I
Cool.
run all these contracts hedged with spreads, more protection on the downside, more leverage on the upside. But Ben, maybe share your screen here again and see if we
Yep.
can take a look at what's going on with Marathon.
Yeah. So checking out Marathon. I mean, look at this chart.
That's healthy.
From literally just 10 days ago, 12 days ago, we went from $17 as a high all the way up to what we're trading at now, which is, $26.70. Pre-market, we're at $26.40. So, that very strong. I looked at the 1 week analysis here. Now, the question in mind should be what happens, right?
Yeah.
A stock isn't going to make this type of movement without some sort of event. So, Dylan, while you were talking, I just went over to Seeking Alpha just to do some research on Marathon. And it turns out that Marathon digital holdings increased 46% as they had acquired 2 Bitcoin mining sites for $179 million. And that was last week.
Got it.
So that's, likely the driver of this huge price increase. And it also goes to show like, hey, it's important to know what's going on with these companies, right? Like if you're not bullish on crypto and you see that Marathon is increasing in price because of crypto, maybe you want to stay away from Marathon.
Yep.
Again, important to do your own research, come to your own conclusions, and use that information as the basis for your investing decisions. We're here to automate it. If you had Marathon in your automated portfolio with PeakBot, we would have traded it regardless of what the news said. But make sure you're comfortable. Pop in those stocks, and PeakBot will do the rest.
Excellent. So yeah, again, for anybody who isn't familiar, option selling is our bread and butter, right? We view this as a slow growth, long-term investment, less trading, more investing, and we wanted to automate it for you. Again, there's still really no household name for automated trading. PeakBot's on our way as we look to make this easy, affordable, and transparent for the everyday person, not even the active trader, person with a 9-to-5 job or 2 with a family who wants to go on vacation and has to sit in traffic occasionally, whatever. You're busy. Nobody can stare at a stock chart all day. Shouldn't say nobody, but most people can't. And that's who we built this for. Again, very simple. And we have a 2-week free trial. No credit card needed. All you got to do is get connected to your broker. We're connected with great platforms like Tradier and others. And go to our website, use peakbot.com, get started, try it today. No better time than the first of the year. If you have a, what are they called? When you,
A resolution.
if you have a New Year, yeah, you could tell how active I am with those. If you have a New Year's resolution, maybe it's losing a few pounds, which I need to jump on. But if it's being more financially responsible or making smarter investments, I'll proudly say that PeakBot's a great place to go and give this a try. PeakBot should never be anybody's entire investment strategy, but it's the perfect supplement to any existing strategies. So put a stock trader in your pocket, go to usepeakbot.com, check us out. But if you have any questions at all, we pride ourselves on being available. We give demos as co-founders of the business, one-on-one calls, whatever you need. We're here, 24/7 chat support. Anyway, enough of me selling PeakBot. Appreciate everybody tuning in. Thank you so much. We will be back next week on Tuesday again, I believe.
Yep.
With New Year's being on Monday. So tune back in next Tuesday for another episode of The Pulse. Thank you so much, and we'll see you at the peak. Take care. Peace.